Honda shares are getting hit today, dropping more than 4%. The Japanese auto giant missing earnings estimates and reporting a 76% plunge in operating profits. It's considered an unprecedented figure for Honda. And our next guest suggests the numbers are a potential warning sign for the entire industry. CNBC contributor Mark Fields is the former Ford CEO. He now sits on the boards of Qualcomm, Lam Research, and Hertz as well. Mark, thank you very much for taking time to join us here on Fast Money. Can you take us through just how much some of the latest headlines in autos and tariffs really feel for you? They seem positive for some out there, but some of the data suggests otherwise.
Yeah, Dom, as you saw from Honda today, it's very unusual that Honda misses. And not only was their operating profit down over 75%, they also guided for the upcoming fiscal year for the operating profit to be down almost 50%. So you have a setup in the auto industry here where you have additional tariffs, which are going to kind of re-rate the margin structure in the industry, depending upon how much they absorb versus passing on to consumers. You have the transition to electrification, which is weighing down on margins. You have the slowdown in some of the markets. And overall, you know, it's a tough setup for the industry going forward, and particularly these tariffs. The big winner here, I think, is the domestic Chinese brands, because they are spending 100% of their time focused on the business, whereas the Western OEMs are spending a lot of their time, probably upwards 75, 80% of their time, figuring out how they deal with the tariffs in their supply chain.
Mark is the former CEO of a big three automaker, and you've been watching some of the coverage coming out of the Saudi Arabia and U.S. kind of investment forum that's happening. A lot of the at least sentiment seems positive out there. How do you read into the public remarks being made by this White House, and how do you feel as though some of the CEOs in the global auto industry are taking it? Full on at face value, or are they still trying to navigate through contingency plans in case things don't go the way that they think they will?
Well, you know, if you're sitting as a CEO of an automaker, you know, you're taking a lot of this with a grain of salt, because they're seeing the data every day of what's happening with the consumer in dealerships. They're looking at their input costs, whether it's because of, you know, recent inflation or now the tariffs. And they're going to hunker down accordingly. I mean, you've seen all the automakers, all the major automakers in their earnings in the last 2 weeks talk about the hits to their bottom lines that they see from tariffs, inflation, currency changes. And that's why all of them have made very specific objectives around cost reductions going forward. So I think all the CEOs are being very, very prudent and planning for the worst and hoping for the best.
76% decline in operating profit. I mean, that's a staggering number, Mark. I was, but were you surprised the stock wasn't lower than it was today?
Yeah, I really was. I mean, it is staggering for Honda. Honda's very consistent. And if you think about it, you know, Honda basically, what they reported in this last quarter it really wasn't impacted by tariffs yet. So the worst is yet to come. And if you look at it, they basically downgraded every financial metric ending, you know, in the upcoming fiscal year. So, you know, it's not only about tariffs, but if you look at their sales across the globe, their sales were down in every region. So you have sales down, you have tariffs, you have input costs going up. So it's a tough setup for Honda, and they're probably the best position compared to some of the other Japanese companies. So I was really surprised the stock didn't get hit higher.